Everyone, I'm Bill Clarkson with Clarkson Santoro, and this is our weekly real estate update for May the 5th. In this weekly series, we update you on the latest trends that are occurring in our real estate market here in San Ramon. Using our more than 50 combined years of experience helping clients buy and sell homes, we explain what those trends mean for you as a homeowner, or as someone looking for a house you will love to call home. The current inventory is 13 homes, down from 19 last week. The average asking price of those homes was $2,037,000, which is up from last week's average of $1,893,000. 23 homes went pending this week, with an average asking price of $1,836,000. This is more pending homes than last week's number of 10, but with a lower average asking price from last week's $2,179,000. A total of 9 homes sold this week with an average sales price of $2,560,000. That average price was up from last week's average of $2,167,000. And the total number of homes was lower than last week's 18. In addition to the just mentioned weekly sales metrics from the last 7 days, we also track 6 key long-term indicators. These indicators help us measure the San Ramon real estate market's health, and they also, more importantly, help us understand where it is headed. The first indicator is the inventory level of homes that are actively for sale. Last week, we gave this indicator a B+. This week, the inventory of homes for sale declined by 7 and stands at half of the market's normal homes for sale. In return, buyers continue to struggle to find purchase choices, and when they do find a potential home to make an offer, they usually end up in a bidding war. This week, we are upgrading this indicator to an A-. Our second indicator is how often the market inventory of homes turn over each week. Last week, we gave this indicator a B+. The turnover rate improved this week from last, jumping to 2.6 times from 1.6 times a month. Clearly, the market remains strong despite headwinds from rising interest rates. This increase in the turnover is tied primarily to the strong increase in pending sales. We are going to upgrade this indicator to an A-. The third indicator is the amount of money buyers are paying over the asking price. Last week we had this indicator as an A+. The 30-day rolling average of how much buyers are paying over the list price improved again this week and rose by $15,000 to just over $291,000 over the asking price. Another way to look at this is by the percentage over asking, which stood at nearly 15%. We will continue to give this indicator an A+. The fourth and final quantitative number is the average closing sales price. Last week we gave it an A. This week, our 30-day rolling average of the sales price rose by nearly $50,000 to just less than $2,224,000. This is the highest 30-day average on record in San Ramon and is 28% higher than the 30-day rolling average was on January 1st of this year. This week, we're going to give this indicator again an A+. All 4 of our quantitative indicators clearly pointed in the direction of a strengthening market, a market that has already reached record heights. This is truly an amazing market, but there are headwinds that just might slow down or cool off this market. Our 2 predictive indicators are not as bright as the sales numbers. The first is the economic health and the financial value of the high-tech firms located in the Silicon Valley. As we have mentioned numerous times, about 80% of the buyers in San Ramon come from the Silicon Valley, and their buying power is based on the wealth of this high-tech market. Last week, we gave this indicator a grade of C+. This week, the high-tech fund we track closely, the Invesco QQQ, declined in value from last week's 320 to 314. On January 1st of this year, the fund stood 21% higher at 401. Over the last 30 days, it has declined about 13%. It is our opinion that the fund and the high-tech industry is one of the most important predictive indicators of where our market could be headed. Most of our buyers come from the South Bay market, and their buying power is tied to the high-tech industry. This week, we are keeping this indicator at a grade of C+, but we are a little worried about where it might be headed. The second predictive indicator we use is mortgage interest rates. Last week, we gave this indicator a lower grade of C- as interest rates moved up. This week, rates remain the same at 5.1. This is the highest they have stood since 2012, over 10 years ago. And it appears that there will be more increases on the way, with the Federal Reserve raising the index by 0.5% this week. We'll keep this week's indicator for this at C-. This indicator remains one we watch closely for its effect on the market. Taken together, we give the overall market a grade of B+. This was a very positive week for this market's underlying quantitative indicators, but underlying concerns remain for the predictive ones. I hope this weekly summary and commentary was helpful. Let me know in the comments below, or contact us directly if you have specific questions about what the numbers mean for you. And if you find this information helpful, hit the like button and subscribe so you will always be up to date on the latest real estate news here in San Ramon. Have a safe weekend, and we'll see you next week with a new update.